song I play, 'cause now it's my turn. The song I play, 'cause now it's my turn to keep the wolves away.
I no longer want to be called a survivor. I want to be called a victorious being. They may have dampened my spirit long ago, but they didn't kill it. I'm victorious in the sense that I'm still here. I know how to love. I love myself, I love my family, I love my community. Never mind, survivor, I'm victorious.
There must be some kind of way out of here, said the Joker to the thief. There is too much confusion, I can't get no relief. Businessman, he said, drink my wine. Oil man, dig my earth.
to be called a victorious being.
Want to know where to invest $1,000 right now? Hi, Rex Moore with The Motley Fool. And if you know us,
I never dreamed that I'd lose somebody like you. No, I don't wanna fall in love. No, I don't wanna fall in love with you. With you. What a wicked game to play to make me feel this way. What a wicked thing to do, to let me dream of you. What a wicked thing to say. You never felt this way. What a wicked thing to do, to make me dream of you. Now I don't wanna fall in love. No, I don't wanna fall in love. No, I don't wanna fall in love. I never dreamed that I'd lose somebody like you. No, I don't wanna fall in love. No, I don't wanna fall in love. No, I don't wanna fall in love with you. Nobody loves no one.
This is the Gulag. Survive and you can redeploy. There's a fight kicking off. You can always have a go at these bastards while you're waiting. Give them some choice words or smash their mugs with a well-placed stun. The fight's begun. Win here and you return to the front line. You lose, your fight is over. Time to earn your freedom, soldier. Go back to the fight line. overhead. Enemy UAV overhead. Enemy UAV overhead. Fought hard out there. Return to base for debrief.
Was that loud?
So I have this big piece of metal wall art that I've been meaning to sell, but I haven't done so because it seemed like such a pain in the butt to try and ship. But then I learned that Mercari is a local selling feature that doesn't require a sketchy meetup, but still has all the convenience of selling locally. So I listed the piece, it sold, and then a driver came right to my door to pick it up. All
We do technical analysis on the show. Thanks so much, Dan, by the way. See, you dropped in a $5 there. Thank you for that. We do technical analysis. Technical analysis all about then, and how do we do it? Well, we tend to use the charts themselves showing us the candles, where the prices have been, where they opened and closed, and the wicks showing how high and how low the prices were during that particular session, or that particular time frame period that we're looking at. And we start off looking at the higher time frames usually, and boil down to a lovely, saucy, juicy, smaller time frame to find the entries for us. We combine this with looking at the RSI and other indicators, one of which is the rocket crop flash indicator, and it's absolutely fantastic. Thank you so much, Space Monkey, for the 499. Really appreciate it. One of the things we look at is the RSI, that's the Relative Strength Index. And recently as well, we've also been looking at the average true range. Now, normally on the show, we would have the MACD or the stochastic, normally both of them, and the DMI as well. Now, the DMI is one of the most complicated indicators, misunderstood by most people that use it. And I've taken that off the charts this week just to make things simplified. And you'll see as well that by combining these things together, we've got an incredibly high accuracy level on the show, and that's historically been the case. There's over 2,000 videos you can go check out if you want to see it. It's all in there. Yesterday, we did fantastically well, calling a 30% dump in a stock. You know, a stock that lost a third of its entire value, a third of its market cap gone in less than 4 hours. We did that yesterday, so that was one of the things that we did. That's nice to celebrate, talk about that afterwards on Twitter, etc. We also have recently talked about big rises in things like Chainlink. That went up, it's gone up, what, 20% since I mentioned it. Also exactly as well, along the way doing that, moving up and down a couple of times in that range, I actually spoke about as well, giving us extra entries and exits on that one for actually trading, because as I say, you're traders. Another one we talked about recently was Bitcoin. While it's at its highs and pushing up for higher highs and dropping back down to 60k and stuff like that we spoke about being a good opportunity. So loads of good stuff. Oh, Cookie! Thanks so much for that 499 as well, Cookie. Thank you so much. Great. Well, I see that we've got 37 concurrent viewers. Okay, so we're not like, massively inundated with viewership. Nevertheless, let's do the squats and make it so that all the ones that arrive late just have to live without the squats. So you might want to know a little bit more about that true range and things like that. So I've got an explanation. Oh, look, there's me up there as well. Ooh, just moved me off. Got an explanation about the true range that we can talk about as well. We've got the charts that we like to look at. You can see the true range down there, and I'll be making myself when we are on the charts nice and floaty here, all invisible background and all that good stuff. So we do that in the near immediate futures. Really, we will be. But first off, let's do those squats. Thanks for joining us. Welcome to the show. Good morning. We're just 6 minutes into the show. We've just got started. We're just getting started. Giving everybody a minute to to arrive. See 46 likes, 34 concurrent viewers. We're going to get our blood flowing, and we're going to look at stocks, and we're going to do some trading today as well, presumably. I reckon a lot of people watching will be actually active in the market, so we'll be looking to know what it is that you're looking at as well. And we'll be doing education, right? Okay. Said last week we won't be doing education. No more education on the show. You know me. You know me. You know me. I don't change. Right. So shall we do it then? Shall I tweet about this show? Actually, tell you what if I were to tweet? What if I were to go on YouTube and get a link to my own broadcast and tweet that link to people so that they could tune in? How about that? Does that sound like a good idea? I think I've seen other people in the world of YouTube doing the likes of that sort of thing. Also, I think Bad Mama Jamma might be watching and streaming this at the same time on his own channel. Wow, that's so cool, Bad Mama Jamma. You're a cool dude as well. So, I'm going to start speaking. Shush me. And I have Twitter. So let's just do this twitting thing together for a second. Let's just do this twitting thing together. So you can see my Twitter feed here. If you want to follow me on Twitter, it's Rocky_outcrop. Right. And you've got, you'll recognize my page because there's Rocky running along there with my face on him. Hey. And you'll also be able to recognize it's my page because of this tweet here. The latte that arrived was actually a black tea, which had a distinct hot chocolate flavor to it. It was really odd. I looked at it, couldn't tell what drink it was. It definitely was black tea. Cloudy, just a little bit cloudy looking, just a tiny touch of that. And it smelled really like it had some sort of hot chocolatey type flavor, like the mug had been used for hot chocolate already and then emptied out and tea put into it instead. Like that sort of a thing. Anyway, needless to say, I complained and was refunded. Then attempted to drink it. Anyway, I'm a human being. I'm always going to try. I'm going to try it. Turns out that black tea mixed with hot chocolate kind of remains dregs is disgusting. Yeah, it made me feel sick. Anyway, I'll tweet that out that we're here doing this. We're here doing this. Like I said, I'll tweet that out that we're here doing this, and then we'll go back and we'll do them. Right, let's do the squats. It's 9 minutes past. If I just wait for 30 seconds, or by the time I've started doing the squats, then it'll be 10 past. It'll make it easy for people to reconcile doing squats with a particular time in the day. Somebody said that I'm the only one that can get them to do squats. Ha, thanks so much. How you doing today? Good to see you, Dirty Jerry. Good to see you, Homer Ghost. Good to see you, Space Monkey. Let's do them. last one. Make it a good one. And we're back. Just like that. How long did that take? 1 minute. Hey, Rocky Outcrop here. Showing you how 1 minute can change your life. Let's second go. We do it not for glory, but for love. That's right, that's what we do it for. That's what we do it for. Ciao! There goes the background. We're floating in space again, ladies and gents. Are you sitting comfortably? Then let's begin. Right, what's the current situation? Oops. Whoops, that's not working, is it? See, my screen's not working quite there. Oh, today's Ticker Bingo Day, by the way. So anyone who knows over 20 bucks triggers me to do TA on a stack as determined by the bingo machine. Does this work? Yay, it worked. Does this work? Yay, it worked. Hold on, Rance. I'm out of breath. Let that sink in. I can't talk. And I talk a lot. Hey, you did the squats as well. Excellent, man. Good to see you. Marantz himself there, another YouTuber. Nice guy. You can check him out there. And he's one of the honest ones. He comes in and chats in the chat. Unlike plenty of other YouTubers who watch the content here, because we do most accurate technical analysis on these most popular stocks is found right here in this channel. And not only that, it comes alongside a healthy serving of education every single time. So the thing that you'll find out there, and feel free to look into this yourself over time, is of course that you'll notice other people out there doing very similar looking analysis myself. There's a good reason for that. It's because I'm an excellent educator. Right, anyway, there's this proprietary indicator here, of course. No doubt people will start copying that soon too. And we're looking up here on the GME charts to $178. That's what we want to see as our target on this one. When we come in for that, what we'll be doing is testing off of course, the region where this gap was. So we would be, of course, cautious in around about the 180 zone. Now, I appreciate that a lot, the majority of the audience that watches about GME isn't actually trading GME. But you'll notice here these are wonderful education lessons, are they not? And you'll probably notice along the way that people have been able to grab some discounts as we do this, and discounts are always a good thing to have. Anyway, that's where we're at. And if we come in and we test off of that, then of course that's testing off of yon line that we had before on the charts, right? AMC over here, and again that average true range indicator just floating around down the bottom of the screen here with no explanation so far. What on earth is this thing? Just considering for a second here, I'm going to be on the right-hand side, which I think I will because I'm comfortable over here for now. Maybe I should stick all my numbers on the left. That might make you a little bit happier. Might be happier looking at that. Let me know if you're happier. Is everything happy yet? Support all things GME, says Marantz. Good one. Support all things GME. Good stuff, bud. The better to be accurate. Indeed. Ooh, what good TA you have. Yes. All the better for being the best at TA. How did that Red Riding Hood rhyme go? Oh, wow. What big eyes you have. Yes, all the better for looking out of, I guess. I don't know. Hold on a second. We need to get to the bottom of this. Yeah. What big eyes you have! What big ears you have! The better to hear you with, my dear. But grandmother, what big eyes you have! The better to see you with, my dear. But grandmother, what big teeth you have! The better to eat you with, my dear. We like a laugh on this channel. AMC, not a billion gazillion miles away of differenceness over here on this chart. But we are, of course, not looking at that secret proprietary signal for a particular target on this one right here, right now. Just double check that. Just sanitize what I'm saying on that front. Make sure that there isn't one sticking out as real needing to be seen or heard of. But there is this. Oh my goodness, what's happened over here? Bang bong, bang bong, bang bang, ding ding. So what happened in there? What was that all about? Well, you do. What this happened here is that we had the signal come in, and then of course we had another signal happen, which has interrupted the flow of this one. And that means it's somewhat less likely that this one then gets kind of taken out, but it will, it normally does. And as a result of this having had the whole shoe in the analogy thing, stone in the shoe. So remember yesterday, I explained this. You've got a boot here. Right? That's a boot, if ever I saw one. And into this boot there was a pebble. And that pebble went into the boot down here, right? Now what you can do, and what you would do normally, is try and sort this thing out relatively quickly. But at this stage now, it's embedded. It's embedded in your foot. It's going to hurt you. It's going to hurt you. It's going to come back to hurt you. It's going to come back to hurt you. And more than just once. Now, if you just dealt with it straight away, you would have had it dealt with. But it's going to come back to you more than just once. And what's happened here is that it has. It's come back to it. It's come down, tested underneath it, tested up to it, tested back down to it again. We're getting all this interaction off the back of this particular level right here because of that dynamic that then gets instilled into the markets. Cheers, chin chin. What a big glass you have, all the better for hydrating you, my dear. And we're looking here at this time frame, which is too small to be making rig assessments off the back of. We've got 12 minutes till the market's open. When we rock here at Crop Show, we didn't try and change the charts without drawing on them by mistake. And we've been doing that interaction, right? So that's happened there, okay? And now, hopefully, we've honk outside, says the ambulance. Now, hopefully, outside, we're looking for some turnaroundings. Zooming on into the chart here, you can see that we did come slightly higher than this area over here, but that was not part of the current trend, and instead we are now starting to trend up. Something that, of course, is a fascination for traders is the trading doodads. Number one philosophy is, of course, which way is the trend? Now, the people that you're looking at elsewhere are going to struggle to answer this question, and it means that, of course, what they result in doing afterwards all the time is then it's like, oh, failing that, then we're going to have to, because if we don't see one, if we can't identify one, then what we're left with is breakouts. Let's look for breakouts, right? So typical discussion then you would see on a show when you're watching them on the internet would instead be more or less along these sorts of lines. Okay, so let's go on over to different chart layouts just to make things a little bit more classic. AMC over here on this one, for example. Now, all of this is really good stuff actually as well. So that's going to just, I'm just going to hide all of this instead. Yeah, cool. And you'd have people say then here that they're looking for, what they say at this point is that they're looking for confirmation of something. Like that's what people talk about, and breakouts. And they'd be saying, well, maybe if we get a break out or above or a break of 30, and I think people maybe probably at the minute are looking probably towards something really tight. A break of like 30. Wait, what are we talking here? A break of like 36, 37. A break of 37 is going to lead on to, and then they talk about huge moves up the way. and it's kind of, it does leave you a little bit wondering about where you know, how it's all going to really fit together and what risk you're really taking on at that point. I mean, what does a break of that area signify? How do you then therefore manage risk? And the resulting factor is that quite a lot of it means that you're waiting for stretch to occur on the prices so that you can then get sort of confirmation, as it's known as, which then creates a zone of what you know the prices had to traverse through to provide that confirmation for you. And when it comes down to trading it, then like so often what seems to then end up happening to newer traders who've been looking along at education stuff is that they think to themselves, well, first off, they're going to get in here at the point at which they've been found that they've got some sort of confirmation, and then they're going to have to then therefore manage their risk on this thing, all the way down to not only the area that the prices were, you know, had to move through to get that confirmation, because now you've achieved confirmation, you feel like this is it could go back all the way here, and you know, you still be right, you just be so sort of early, so to speak, is how people seem to characterize it. You need to then look back to other things like, well, okay, maybe we need to take out this low to get confirmation that we're wrong. You know, so the confirmation aspect of it bleeds both ways, where you're getting where you're going to have to then have confirmation also that you're wrong. So there's this area to go in where you're hitherto, you know, up to this point unconfirmed, in the same sense that you were unable to enter during this phase because you're not confirmed, and then you get up to this point, you're able to enter, but then you're waiting, oh, that's okay, and then, oh, well, this is still not confirmed, a reversal against me, which means then that you have to look up to these big targets just to get some sort of equivalent move of something like a 1.5 to 1. So then you look up towards something like the 200 simple moving average, and you've got a nice solid 1.3 to 1 risk to reward trade, right? Where you're having to stomach all of this movement in the meantime, potentially, and not take any profit in here, because doing so leaves you on a less than 50-50 move, which means that so often as well, people who experience attrition in their account over time are actually taking trades that look like this. And let me know, I mean, say so in the chat. You know, does this remind you of you at all? Do these look like your trades where you're taking a solid move up the way towards this point, but you had to suffer so much just to get back here? Or is it even worse? I mean, we had that picture that Vic Vince from the community shared with us, where people actually trade like this all the time, you know? If it gets back to break even, I'm taking profit, and this is their trading life, is where they spend the entire time in the trade, like in that red zone, right? Does that remind you of anything? So these are the struggles that kind of cross that you'll encounter over time when you watch less sophisticated stuff on the internet, and when you read articles or you're looking at Investopedia. Indeed, when you follow trading strategy guides and you're trying to struggle through the world of creating your account, growing your account, and living as a trader in a world where the best information that you can possibly get seems to resolve into actions like this, which you end up trading, of course, on a time frame like these, which is of course a small time frame, and you're thinking to yourself, really, as you go into all of this, you think to yourself, I'm a day trader, right? I trade intraday. So what you're saying to yourself, by the end of today, I will have made some money. Right? That's what you're saying as you go into it. And then this sad sort of reality of realizing that you actually spent, you know, the equivalent maybe of 4 or 5 days in a trade, all the while losing all the time before you even got back to break even on the trade, settles in, and that obviously changes over to I'm a swing trader. That's what happens, right? Let me know in the chat, does any of this remind you of what's been going on with your own things and everything else? So then, of course, if you are new here and you're wondering what's the difference between yourself and the result in all of this, is that that's a thesis which would take a really long time to describe. We've got 5 minutes till the market's open. Instead, of course, you can just chat amongst yourself if you want to know that this is, of course, the place to be, and that you're very much on the way towards rectifying these types of issues. Let me just also be very, very clear as I jump up towards the 4-hour time frame and zoom on in and show you a little bit closer as well how this sort of thing can look in terms of the movements, in terms of if you were thinking along the lines of being a swing trader, that this is more conceivable in terms of that type of idea. But then also considering like that waiting until that you're into the middle of this zone and trading up would be to ignore the context of where you are. So many people look for that type of thing. They're waiting for this type of sort of philosophy to kind of get to the point of being triggered, and they don't think about like things like ideas of simply trading within this chunk alone. For example, and trying to take the movement, if we did push into the gap to fill it, and just be completely content with that, bearing in mind that in the equivalent sort of risk to reward, for example, of a move like that could easily be more along the lines of something like this, which in terms of if you were to take them all the time at a 5-to-1 risk to reward ratio would be exceedingly more lucrative to you across a period of time. You also would be probably wanting to think about the lines of risk management, really involving risk management into the decision process that you're making with regards to the trades that you're taking, and then getting those higher risk reward moves there. That's a much better looking trade overall. You'll also be wanting to understand the components of technical analysis to do with support and resistance, and what it would really mean to be going past certain areas, and therefore how these concepts tie in together. Where you've got the concept of TA going perfectly in harmony with the concepts of course, risk management, and together, between these two, forming, your own discretionary ability to conduct yourself within the markets in a lucrative way. And then, of course, as well, from a sort of overall understanding of where we are in markets, what you're really looking to achieve is to actually understand the flow. So while you can understand whether or not we're in a trend, you can understand, well, actually, let me just show you, so you can understand trending behavior. Then also, so you can understand when trends would end. Not just I've been able to identify a trend, but when it would end. Then you can also understand consolidating behavior and what this sort of thing looks like. And you can also understand the implications for consolidation behavior across a period of time. And then also whenever you'd be able to identify from that point thereafter, whenever you're in a trend. And then, of course, when you've got confirmation of that trend, how to be able to put these things together with the concepts that we spoke about of TA and risk management to get yourself a really, really, really great entry, understanding that when you're buying things, you're buying them at lows, and when you're selling them at highs, and that within that structure, of course, there is going to be a better value area to be playing, and that's what you do here, and that's what happens on this channel, and that's where you build up over a period of time, and you do that, and you know what happens? It happens so much within yourself as well, and that you develop a sense of resilience, a sense of knowing where you stand relative to the chaotic flow of the markets around you, and you actually develop into a self-reliant trader. And then, of course, at that point, I'm even more eager to have you be in my surroundings. I'm looking to, of course, surround myself with 1,000 of you all the time. And then on that note, bearing all that in mind, I want to then congratulate every single last one of the people waiting. Oh, fuck. Am I not streaming? Tell me I am streaming. Oh, that took a second. Panic for a second there. Want to send out a massive well done to all 98 of the concurrent viewers out here right now. Please do drop a like. What we're looking for with the markets just opening up in the next 15 seconds by my watch is this trying to sustain itself within the overall fake-out territory of what has been a consolidation type wedge pattern here, as we've broken down the words, looking to come up and try and test off targets like the 50 simple moving average, go in for a gap fill here, perhaps make our way into the overall Ichimoku cloud on the 4-hour time frame and start to try towards higher targets. We're currently sat here at 36.50. The markets are opening up right now as we speak, and that means that we put in a 30-cent gap towards the downside, which is absolutely immediately recoverable, and that is going to happen in the immediate future. Here we are over here on GME, and we can see that there is no gap on this chart on the 4-hour time frame. Dropping down from here though to the 5-minute time frame, we can see that maybe perhaps there might have been some sense on this one, and that has wouldn't be a rough aircraft show, blah blah blah, has also then immediately been resolved on the tiny time frames at the start of the day, taking out nice moving average here. For the 200 simple moving average, as you can see, sloping nicely down here. Like, you can imagine, wouldn't it be lovely to be on a plane that came in for a landing that felt somewhat more like one of these than what so often seems to be the case when you're on a plane, where it comes in more like one of these as it happens with the bigger slope down the way. And oh my goodness, we just hit the bloody runway. Like, look at that lovely longward down slope here, as we've been waiting for such a long time, ever since this cross that happened here at GME back at the last pivot point of $185. So this is just a 5-minute time frame showing us the positivity that can of course accrue over time as we spend some period of time here above that trajectory point. If you can imagine being a passenger on this plane right now, we obviously experienced a good degree of turbulence here on the 50 simple moving average, which is the 5-minute time frame in this blue dotted line which this plane is drawn on top of, which I hope you can see, and I'll zoom in now so you can see it a bit clearer, hopefully for you. We've got this blue dotted line here, and we're obviously above that currently on the prices, but I'm also looking at this 200 period simple moving average here, and it is nice to be pointing this out at the start of the day as we come down this more graceful slope, having spent quite some time below it, and now of course cracking up above here. And this is of course the lovely trade we've been taking now, knowing where we were yesterday and talking about this obviously set us up for this, but we want to see this have sustain itself above there and actually begin to be able to trend up the way. Looking at the last big series of candles here, as we can see, we're going to check out the average true range after I zoom back out the way again, but just to kind of compare in terms of like, oh, it was back over here, we saw bigger candles, big period of time here with lots of small candles, got a big candle coming in just here. I hope you can see what I'm zooming in on actually. I think maybe at times I've got the screens, fully zoomed in on my screen. Anyway, so going back up by the way, just following us all the way back up to where that last pivot point was, which is actually no longer visible. Let me just get that visible here for us. He did it again. He did it again, guys. Drink when he does it. Drink when he does it. We'll be drunk by 9:30 or 10 a.m. This last period of time, this is where we saw that cross happen at, and this is obviously then that that's been since over here $185. We've been unable to see the prices cracking up above, apart from that one time after the retest of the cross. So to bring in this sort of paradigm here from what can happen regularly, does happen in this period in these sorts of moments. Let's think about the evolution of where these two lines could be, and if we're going to have a little dogfight between the 200, is this, are we going to see a little dogfight between these two planes coming up here, and hopefully then that's a really weird looking plane there. Hopefully this blue one, which is the forces of goodness, will overtake the white one, right? But now we're retesting that area. On the 1 minute time frame, it's going to have sort of different layout with regards to the moving averages here, breaking up above it, coming back down, and retesting, both of these. This is from the start of the day with where we opened that retest again just now. So there we are, right? So this is the type of attitude that you got to have when you're trading, understanding the flow of the markets, what you're looking for at the time, on the time frame that you're looking at it. So one thing to bear in mind, this is something that we do on the show every day, so it's not going to be a massive surprise to you when I kind of point this out, that when I'm looking at the markets opening up and I'm trying to see where will we be, I'm trying to think how's the next period of condensed time going to go for this stock, and how then therefore will that potentially look for us over the next half an hour. And by the end of that half an hour, we'll have a good idea where we are for the day, because that's called the opening range. That first half an hour to an hour's trading. And then with that opening range, so much of your day's price action is often determined. As we know, we tune in here every morning and we know about it. So I go right down, I boil it down, look at that little time frame, I try and establish where we are, and then I carry that through to the opening range, and can do that on any particular stock that we're looking at. So that's happening right now with regards to this one, and there was a point that I was going to make, and it was with regards to how we're seeing movements here on the price action with regards to the true range. Where's the true range here? And we're seeing an uptick here on AMC course, going over to GME here, and you're seeing this uptick on the true range as well. So obviously we want to see some carry through at this point. At the same time now, okay, so I use two oscillators, right? Two oscillators here in the chart. This one here at the top, this top one here, that's your average true range, and this one here, that's your RSI. The one with the green bit and the purple bit, that's your RSI, that's your true range, right? And the true range, as you can see here, this uptick on here, right? So that's significant to me right now as I look at this, and I know this anyway. I know this anyway by looking at the charts, but I'm able to draw the point out here so it's more visible. And what we want to see then, when we talk about how you want to see follow through and volume, is you also want to see that happening at a time when you've got this true range aspect on the go, also getting up a bit as well, and we're starting to see that happening. Now there's other things we've talked about in the past, and you can combine indicators together. You can see right here that in the last just couple of seconds here, as we've gone through this last sort of 30 seconds, that what's happened is RSI has ticked up into this bullish control zone, and the true range is ticked up the way as we were talking about it. So you can see that there was this little tick up as the RSI went up and just licked off of the bullish control zone of where I've drawn it on my particular RSI, which is unique to the way that I set it up, and nobody else has it laid out on this that I've seen in popular YouTube land in this particular exact way, which is of course not a massive degree of importance with that, because you're all free to make up your own minds about where you put them. I'm just saying that that's where that happened to be at the same time that that's happening, and this is one of the reasons, these sorts of reasons so often seem to come back and confirm that I've chosen the correct places for these things, right? So as we see the candles still going up, and yes, that's right, they've hit off of our target that we spoke about at the start of the show. That's right, we've gone up to 178. Well done, everybody. Let's just take a moment away from the chart to give us a round of applause. So the true range here and the RSI moving up at the same time is obviously significant, and that's a handy thing to have. We've explained through the RSI a whole bunch of times recently with regards to the changing conditions that are happening here. You can see that we talked about when we go into the bearish control zone and into the bullish control zone, that what it leads to is a change in conditions, and that when you're being in the bullish control zone, you're looking for the bearish control zone to show you where things are oversold. Now, in a sense, in a market, in some markets, we really do want to see it pushing down past the 30 level, okay? And I realise that I've got mine at 35. There's that's okay. You can see here so often when we've gone past this area, we don't quite make it down to 32. We do dip in a few times, but this is a significant area. I do sometimes debate within myself whether or not I've got where I want to have this at 35 at the bottom or not. It does happen inside myself. But anyway, you can see though that you expect this area here to be your oversold zone. People talk about overbought, oversold, and what they're meaning is that when you've gone up past a certain area, like up here at the very top there, that would be overbought, and you go down at the bottom behind me here, you can't see behind me, down here, that would be oversold. And those are where you see the turnaround points. But a more sophisticated way of looking at it is actually when you've had conditions like this is the turnaround point. Then you look for failure, and then, but we didn't have it there, that actually moved into the bullish control zone again. This is the turnaround point. Then you look for failure. It's debatable here, but actually we bounced, we came up, into this area, came up again. This was your failure. Then we pushed down. We did see bounces off here. You can see this is why I want it at 35 still. You can see that still there. Then we pushed down. Looking, are we going to have a change in conditions? But also, we were looking at the other factors, such as fake out territory, etc., and the old magical indicator here telling us exactly where it's going to go anyway. So we combine them together. Now, another thing that you would do, and this is to build up just on that, just to show you as we're here talking about this subject, now I don't want to go massively into education here on this front, but just because we spent that time talking about the true range and looking to understand what that is, another one that I want to bring on is the accumulation distribution, and talk about that just a little bit as well, just to show you how that's different to the true range calculation, because the accumulation distribution is added on in turn by the candle color itself, not with any look back at previous ones or the position of the price. So you can find conditions so frequently where candles, gap down the way and then have a good day, but still don't actually take out the previous low. So it's been very much negative, but it looks positive, and then you get an uptick here. So there's dynamics on this sort of thing, and it's made by times in the volume with the candle itself. And you can see that we've actually managed at this moment in time to take out a previous structural area on the accumulation distribution, looking like things getting accumulated during this phase, giving us a nice idea that if we do find support here, which we hope to find, that it'll come into this area. Meanwhile, during this phase of watching the price action, it's gone up and touched off the 200 simple period moving average, right? This is the 15-period time frame. Where did it come in for? It came onto this area. Now, on the 5-minute time frame, as we were doing all this, we'd already covered that right at the start. And then I was looking up the way, saying, well, thinking to myself, where could be the next areas that we're looking to, knowing, of course, that we're up above the 50 simple here and quite a ways up. And it was nice to see that happen. I should have actually spoken about that directly, but it happened in my brain instead, in silence, instead of happening out loud. But there you go. Right now, we pushed back down the way, and we've, of course, come in, satisfied. Oh, look, you can see here there's a 5-minute one. We've not quite done this, not quite done that 5-minute target that's visible for us there as it happens, but that could be the next area to look to thereafter. So hey, and it is, so let's continue on with that. Looking to try and regain, in terms of support and resistance, our area here. So you see, there's so much overlap. There's so much overlap in terms of what we do here, and it understands the trend, understands the turnaround, understands the inflections, understands the current targets, understands the implications of the trend, the turnaround, the current targets, all of it, and where then that would then lead to on the next one. And you feel this flow of the markets, the flow going together. So just to kind of summarize then in terms of what that average true range indicator is for you, the key takeaways in terms of what Investopedia would say about it is, and bright future ahead for all of us as we build the Wikipedia of our own, which will have hopefully got more accessible, better and evolutionary information put on there in a peer review format, so it'll be a better system, I think. But here we have this information. The average true range is a market volatility indicator used in technical analysis. Well, interesting point here, they're going on to talk about it in this whole way through here, talk about volatility. And this is one that's done by my man, J. Wells Wilderger. J. Wells Wilderger. Or, of course, if you want to pronounce it correctly, J. Wells Wilder Jr. And the really thin perspective on this one, to say that. Now, there's a lot of ways this is used, and I've talked about it recently. The last time that I mentioned this being used in a completely different way to this was by the very, very famous group of traders called the Turtles. You can read about it in the book, written by the most successful one of those turtles, who then subsequently went on to lose all his money and have to write a book about it. I'm just kidding. Although it's kind of true, there's massive ups and downs in it. It's well my most amazing, famous, the world's most respected trader of all time, perhaps amongst traders themselves, is Jesse Livermore, of course, ended up shooting himself in the stomach. So, hey, anyway, right, so, moving on. The way that those guys used it in the Turtles, amazing trade group that they are, was to look for a stop loss at 2 times the ATR. So back over here on the chart, if you were trading on these moves, on this time frame from earlier on, keep moving it today. It's been 4 or 5 times I've tried to do that. If you were trying to do this earlier on, you might have had a true a stop loss, like a buck, just a buck movement here on the 5-minute time frame. So you can see the implications of this, Now, those turtles never traded on the 5-minute time frame. In fact, they were much more likely to want to take trades based off of technical factors they would notice on things like the weekly time frame, as it happens, So if you're looking at this, in terms of this stock, on the weekly time frame, in terms of how much you have to manage, as this is comedy value here, as I pull in I'll just make it full screen, as I pull in the average true range to go for this one obviously changes the dynamic quite drastically over a short period of time. Also, in terms of whether or not this is a massive volatility indicator, it's somewhat questionable as we look at this sort of quick demonstration of how this thing obviously changes over a period of time. But obviously, I think this drives home the point of how necessary it is to be looking at things in the context of which you are making your decisions and how you're planning your trades. So this is actually taken somewhat longer even than I anticipated as I started this process. So the result of which being that I've actually finished the point that I was trying to make by the time I come up towards the top end of it. So you can see that's obviously extremely significant depending on the time frame you're looking at. And that would have given you, of course, super tight entry on that one. Fantastic start to the day. You're obviously managing yourself very well in a trade if you were to be doing that. But of course, these are stocks that are not heavily traded amongst the audience. Instead, they're mostly bought because the audience, in a sense, is investing. And it's the difference between an investor and a trader in many ways there with regards to that stock. There's obviously a massive amount of overlap. But here's another one that we can look at, which would cause a good degree of consternation for folk who are trying to do analysis on it without being able to fully kind of integrate with understanding extended periods of consolidation at points at which trends can turn around. So, and this is one of these charts for us. And I just want to get rid of some of these drawings, but without massively destroying the chart I have. I'm just bringing up this tab on the right and snapping through a whole bunch of these brushstrokes where you can bet your bottom dollar that I drew most of these brushstrokes and went in to make points at the time, and I'll probably go on and do similar sort of stuff here as I'm going through this one. But you can see, right, so there's plenty of different ways of breaking this one down, and we've done it recently, and we've done it in the past as well, obviously beyond the sort of near recent, depending on how you kind of categorise that word. Whatever. So one of these ways of looking at it is, of course, this downward sloping line. I could draw in a line at the bottom of it, but that's kind of almost besides the point. We know that there's been this period of time when we've been testing off of this numerous times, and that if we're going to have a bullish stance on it, there's going to be a degree of asking about whether or not we can push past that zone. That zone lining up nicely with where we have a significant area of horizontal support and resistance, right? So that's already right there for us. We know that price point's coming in at around about 1330, 1328, I think it might actually be on that level, 1332, and that's where you'd find that potential for it. Now you could talk about things like, if you were to be using this as a pattern, what would be the implications of what you're talking about? You'd have to be very clear about the reasons why you drag it back into this area of inflection to have this operate as a wedge. But if you were to be doing so, and far be it for me to, not far be it at all, but forgive me for not bothering, if you were to be looking at it and then talk about the elasticity during this zone here, without having to necessarily justify your placement of the pattern, what you're looking for is a move right up to our next horizontal support and resistance. You could be arguing about whether or not we've truly broken past this zone until we're past this green line, or if this is a breakout territory. So then, of course, you're going to have a good dynamic in here of whether or not you'd be talking breakout, fake out, etc. So what would be a fake out? How would you look at fake outs? Unfortunately for this, in terms of the highs, it's so steeply sloping down the way that when you're looking at fake out territory and just considering the previous body closures, etc., you're talking about a 6.86% move towards the top side, which is a freaking decent trade in and of itself. So instead, you'd really want to kind of concern yourself probably more to do with market structures, not Gary Gensler's recent SEC report, but in terms of the structure here that we can see. If you think about this from the point of view of if these were the key points that you had to hang off the bits for your ceiling or whatever, where would they be coming in at? Where would they be coming in at? If you can't think about it in terms of where are the key structural points on this, what if this was a physical object that you had two sticks that you needed to hold it up with? Where would you put them in at? Well, a good obvious point would be right there. But also kind of bear in mind then the region up above. There's this region above which might not be quite so clear, where we had the body closures and the wick support from before, right? So that would be where you'd be looking to on that front to say that you've kind of pushed out to fake out territory, not necessarily up as high as that 6.86% move. A couple of other reasons for it is that you've got confidence in here that 50 simple moving average where your previous highs were. So you build that picture and you can understand all the different cohorts, because if you've got a guy over here, right, who thinks in a particular way. So this is his think bubble, and he thinks I'm looking at things like moving average crosses for my trading philosophy. And you've got a guy over here, and he's thinking to himself, well, I'm going to be looking at patterns. And whatever patterns, symbolic, and then you've got other people trading in various different ways, or whatever. Then behind this, there's like another thousand people who are all kind of thinking along the same way, another thousand people who are thinking along the same way as this dude. Now these two are not necessarily thinking the same as each other, right? So understanding then that there's going to be certain flows and all the rest of it in terms of the market, and then bear in mind simple things like all of the stuff that we talk about all the time, combined with stuff like where is the volume now? So see, I'm trying to find volume, and there. So combined with like looking at things like volume and understanding how volume works. Now, most people, of course, don't understand at all. So if you're looking at for instance, if you look at something like accumulation and distribution as ideas about volume and understanding the implications of it, and understanding the implications of the patterns and support and resistance, and you're able to draw things together off the back of the volume, etc. That's one thing to be saying, but primarily as well, people don't really understand that what volume mostly boils down to is that if you can't say there's only two types of volume, starting volume and stopping volume, then I don't really want to hear about all the nuance type of thing. But what we're really looking for here, let's just make it really simple and call it starting volume, because we'll be looking or else indeed stopping volume, depending on what way you want to look at it in terms of stopping this downward or indeed starting this upward. But you'll be looking for one of those two, right? But anyway, you can got these different cohorts of people, and then looking at the different ideas that they have together, where retests etc. come from, based on this philosophy, based on this philosophy, etc. Then you can keep going and going and going. Now, there's other ways of doing it. So we can add in extra philosophies on top, tons of philosophies. A really great one, Fibonacci, from those highs down to these lows. You can see the 236 comes in where? Comes in and around about these lows. Where I was trying to get to and say that's where fake out territory would be at. This is where the fake out territory. So we know that we've got fake out territory coming in here at challenges of the 236. So movements beyond the 236 are movements beyond fake out zone. Movements up to the 236 are only movements towards a fake out zone, resulting in an invalid Fibonacci, where you couldn't target higher movements up the way. And you can see then suddenly you've got another confluence group of people who are thinking to themselves, I use fibs, and it goes on and on and on, on and on and on. And these guys are not thinking the same way as these guys. These guys are not thinking the same way as these guys, right? You've got all that. And then you've got, of course, underneath it all, you've got us, who understand everything else going on in the markets and position ourselves to win every single time. Anyway, that was nice, and that was a good way, a good little interlude to an intermission there for us to discuss as we look at the price targets here on this one, and simply reference the fact that if we are to be moving outside this zone, anywhere in here, right here's fake out territory, anywhere in here is retest territory, moving back down below this area obviously makes this part your bad zone to be in, managing risk accordingly makes it so it's easy. Sorry, there was a short position, wanted to draw on a long position here just to show how this could operate for you, and along these sorts of lines, if you're looking at sort of 1.5 to 1 risk reward trade, then all you really need to do if you want to position yourself in a small format to take any chunks out of the market is in this box here. If you think that there's a good chance that we could go up and test off of this area, all you need to do is try and aim to get into this area and say that you're no longer willing to take on the trade if we move down past this area down below, and that'd be a nice easy over 1.5 risk reward trade. And that's before you add in any of the other massive cohorts of traders. For example, what if we see people who trade when we move up the moving average on the RSI? What if we look for the true range to kick up the way? If we do start to see some sort of breakout movements up the way, what about the momentum traders that come off the back of that? Who about momentum traders? And what about all of the other fantastic things that we talk about all the time? For example, the MACD. What about all the people out there who want to trade off the back of this MACD MACD cross that's coming up right here on the 4-hour time frame. You know, what about that one? What about the people who want to trade off the back of divergence? What about all those divergence traders? So let's add in another cohort just real quick, you know, to the ones that have obviously gone off the way. You've got MACD crosses. You've got I don't know what, that's not even a human being any longer. You've got divergence guys. You know, so this is the way it is now. That's why my analysis is, on the one hand, so incredibly educational, because it needs to be. I'm looking to carry people along with me and understand the movements in the markets. Also, it's the opportunity for that education. It only really exists here. Also, why it's complicated is because there's that opportunity to deliver that information. But I will be simplifying things over the next week because it is possible to conduct yourself in a rather simplified version of all that and not understand necessarily the full nuances of the markets and absolutely still integrate it well with what you're doing. So that's what we're up to at the minute. That's what we're doing. That was the education section complete for today. That takes us through to 4 minutes to 3. This is pretty neat. We've got 35 minutes left on the show. Ticker bingo hasn't been requested by anybody, but it could be that my bingo machine's not working or something. I mean, the alerts aren't. So that's cool. It's not like it needs to be. Just want to make sure that it's not my fault, right? Because that's important. I think we should be good on that and on streaming elements as well, right? Whatever. Doesn't seem to be loading up there. Oh, sugar! That's not fair, that one on it. Sorry. Thanks for that. That one's not fair on you and everybody else because there's balls missing from the machine. So I'll run it again, right? Katie, babes, thanks for that donation, $25, very kind of you. Please explain Ticker Bingo, Ticker Bingo one more time. Also, when Ticker Bingo ringtone. Well, actually, as it happens, I can supply you with that music. You can use MP3s and I can give it to you in that format. So later today, on that front as well, I think probably we should get the news things since we're chatting here out of the way in terms of show news or housekeeping, and we're in this wonderful world of black space, like some sort of 1990s pop music video perhaps. I don't know, maybe not actually. No, it's just really epic and cool and rocky and unique. So, going to be a base camp chat, right? We wanted to have that. I'll go into Discord after we've wrapped up today. One of the reasons why I'll focus on getting done by 3:30 so that we can aim to be there by my time, so that we can aim to be there by 4 p.m. my time. So as in I'll be done in half an hour. So you know, 10:30 to be there by 11 my time. If that works, if it doesn't work, let me know and let somebody know who can let me know or let me know or whatever in the chat. Figure that out for that thing if that's good. I think this is what we try to arrange, and I hope that we can do that. And the other thing is, balls. Ticker Bingo is what we do on Tuesdays and Thursdays. Is instead of actually requesting specific stuff at the time, what you do is you buy a bingo ball and then you get it in the machine, and then any request that comes in over $20 will activate the machine. We'll take the ball at the time, and it makes it so that when we do the analysis on it, it's determined by the chance and the random chance of the balls on both those days, Tuesdays and Thursdays. And that's the only way to actually get your analysis done on that day. So if you actually request a coin from me, a cryptocurrency coin, a stock ticker, or a commodity, then of course I will only take a look at that if it happens to come out of your machine, which means you need to have bought the thing. As we actually hit 10 a.m., thanks so much for joining me. Do hit the like button and the subscribe button. If you haven't done already, and join the Discord as well, you do that via Patreon. It is $22 a month currently to join the Patreon. That price changes on a daily basis based on 4x, because it's actually £19.50 a month, and that's consistent in British pounds. And then and it's going up again, next month or whatever. So like, whatever. Probably. Right. I'll run the machine again and take the ball out. The other thing is we're going to make an Excel. We're going to make a spreadsheet that can be for balls to stay in there because there's a limit on the amount of balls that can go in. Currently, we're operating with a limit of 11 balls inside the machine. So if you want your ball to be in there, then it needs to be higher priced than all the other balls that are in there, and that's the way that we're doing it, and it's fun. And if you don't like the sound of it, it's probably because you're not a trader, and this is a show for traders, and that's not a problem. You'll become a trader over time and all the rest of it, but that's what it is, and that's a bit of fun, and that's how it goes. And the $20 minimum, well, that's worth way more, right? So that's what it is. Way! And the machine, though. The machine. Let's bring up the bingo machine. So it's brilliant. It's an actual bingo machine if you haven't seen it as well. Bing, bong, in the corner. Just over there. You can see the bingo machine just over there. Bingo machine. And we can do the thingy. Woo! Oh, it's time chat. There it is! So can't have that chat over there, can have chat up there instead. Right, ticker bingo. Woo! What was that? People always worried. They worried from the start. Would our lucky stock make it into the ticker bingo machine? Would it? Would it? Would it? Would it? Well, it did, and it has come out almost every single time we play Ticker Bingo. One of the first balls out of the machine has been ball number 6. That is, of course, the one that's listed for GMFE. Sorry, GME. GameStop. Well, we've done it already. We've done it already. And we've done it already. Right, yeah, Rocket Corp, we need Ticker Bingo info, a running banner with current ticker stats on the list. Would be helpful to identify which tickers are still listed and how much we want to pump them. That is the way. This is the way, ladies and gentlemen. This is the way. Right, so I say we all the time, but I will do this. Make it happen. Really kind of relieved, despite the fact that my camera is showing up here, to see these alerts on the screen over here. Can I just grab them? Where is it? Where is it? I'm trying to. You can. See, I'm moving that around. Let me just copy that and go back over here. Pop that on. Ooh, look at that. That's better, right? Because I was wondering, they didn't seem to be working the other day. Great. So I'll do that with a little help from my friends. Oh yeah, right, cool. We'll go back to the charts and start and continue effing around looking at stuff that we want to look at. I could show off for a second. Shall I show off for a second? Let's go show off for a second. It was funny yesterday looking at the C. It was like created CRTD, the CRTD chart, wasn't it? What's it doing today? 4-hour time frame, not looking so gravy. 1-hour time frame, not being a great start. 15-minute time frame, not done that well. So had you actually just kind of gone on with the attitude even? Today, what's the day been like so far? Oh, we've already gone down 10% today on this one. Oh dear. So what's showing off though, Rocky? I hear he is asking. How does that work for showing off? And no doubt a lot of you saw the video that I put out about this, just to kind of, people have encouraged me recently to do this sort of thing. The prices were at the very peak of one of these bits. Actually, it was right here. That's where the prices were. So let me just draw this in properly. The prices were right here. Yesterday, when I said, quote, no, I'm bearish on this. I'm going to remain bearish. I'm going to remain bearish on this. Yeah, I'm bearish on this from right now. That's what I said. That was nice little moment to have on the charts there. And of course, then the prices dropped down, and we're going from to where they are right now, 35 That's nice. 35%. 35%. So that's what happened yesterday. And then, of course, if anybody wonders about why it's $20 per Twitter bingo, this is what happened yesterday. I didn't trade that move myself. Didn't get to, because after finishing yesterday, I did do a couple of little admin things, which I need to do because I care about what I'm doing here. I'm doing this for a reason. This whole YouTube thing, it's like there's lots of reasons, one of which being I care about humans and empowering people. Another one is be the change you want to see in the world. Another one is that we're actually fighting a massive war against the lack of transparency, and we're doing that by empowering individual people and giving them the tools that they need to fight back. That's what we're doing over here. So all these things I really deeply care about. Then I had to do that, and then I had to go and do that AGM I was talking about, which was really kind of good to have got that done. But it's going to have to be another one because we didn't actually resolve anything through it. So there'll be another one again afterwards. And that it was very, very long, and it was all done. And I actually did go to the place itself, and that was nice. It was cool to be in with one of the neighbours and to socialise a bit with like 20 other neighbours. That was really cool. And for the first time to have like felt like I socialised with anyone for like other than tradesmen and people who work in shops. And my mum and that for like a long time. So that's really cool. But at the same time, it sucks because I have to go back and do it all over again. And they don't know how to do stuff on the internet. So you use that whole Rocky Outcrop muted for 2 minutes. Yeah. I know. Talk about sitting there for like an hour at the start of the gosh damn thingy. An hour. With it like not working. And me sat there going, hey guys, do you want to use my hotspot? Do you want to use my hotspot on my phone? Because your broadband's not good enough. And then being like, oh, but we've got this and that. And I mean like, I do this. I actually do this professionally. But we'll be okay. It was like this in the last AGM too. Do you want to use? I see that mic. See, the problem is that you've got feedback coming through because you've got your own volume up too loud. What's that? See, the thing about it was there was a glass of free wine as well, so I totally wasn't bothered. Actually, I had a really quite good time, and the people hosting it were really, really lovely, really nice people. Really welcoming, warm, super good. That's why I've got a warm, happy feeling today after all of that, even though we didn't achieve anything, because it was really nice to socialise with some nice people. Why am I even talking about this? Oh, I get inside the animal. Excellent, nice one. Shout out to everybody that's seen Freddy Got Fingered in the world. Feel free to tell me about it. Okay, cool. Rocky's the best, says Dan Anthony. Oh, thanks so much. That wasn't so bad then. We breaking out. Yeah, Gemma, hopefully. Sally Mander gave us a lol earlier on. That's cool. D-Wack is metal. Oh, D-Wack. Oh, the Wackles. D-Wack. Bam. Yeah. So you'll remember as well the way that we talked about this. It is mental. I think it was fair to say. I said emotionally charged. Remember, over here it's why do you wear your socks in bed? Over here you've got soft food cart saying only a vampire wouldn't wear their socks in bed. Over here you've got like 2/3 of my former girlfriends tell you it's bad to wear your socks in bed. Over here you've got a third of my girlfriends who've worn their socks in bed and really confused the issue on where people actually stand with socks in bed, not socks in bed thing. And then you've got the spurious argument. Have you seen that? See, there's a talent. I've got talent there. Did you like that? The way that yesterday, then I kicked into full argument mode, and I was like, now we're having a proper argument over something trivial. I think that's totally normal. People like to deny that that's the way that it is to be a human being. But let's be honest, like, that's one of the things that we do on this channel is we're honest about stuff. That's what it's like to be a human being, right? And the same thing is actually felt in this doc. And if you don't really know what I mean, then I think you probably watched that movie. I think it's called The Argument. The Argument movie. Have you seen that movie, The Argument? Is it called The Argument? Yeah, it's a film. It's like an Irish play in the sense that it's trapped all inside the one room. Is this it? No, it's not that film, is it? It's like parents go over and argue in the other parent's house. Right? Is this 2020? Have they remade it? Or was the original one a French film? Is that why? Is this even the same thing? It's like that. Couple argue party. Yeah. Even in turn. Wait, they decided to recreate it. I can't. Anyway, I'm stressed out looking for whether that's like that, right? An argument. Oh, God, I hate arguments. They're so stressful. And it's the talent to be able to construct one well. So anyway, at the minute we're retesting our gap area, right? It's nice to know what gaps are, isn't it? And to know that you can come in for retests of them, and that often they're to be anticipated. And then it's probably without doing any real sort of nitty gritty on this one. You can just kind of with just simple familiarity with markets talk about how obviously there's a lot of people who be thinking along these lines right now because let's see this is achievable. So this is an actual trade that's actually on right now for a lot of people in the world probably. And then let's see, when does it become 1.5 to 1? This is sort of like the equivalence of crap we were talking about earlier on. Where's the 1.5 to 1? It's within this candle body. Within this candle. If you take it from the low there to the high there, you've got a 1.5 to 1 risk reward trade based purely off of a retest of the gap, which goes back up and retest that before maybe even ultimately falling down. There's your 1.5 to 1. There you go. So people often ask me, people are always asking me, hey you, what are you doing in my garden? No. People are often asking me how do you trade and stuff like that. And then, well, you know that off the back of these candles, right, they've got this movement in general on them, on average, where we've seen the movements on average happening. And you know then, in terms of this chart here, that in terms of understanding in any given individual candle, how much risk to reward was maybe on the plate with regards to doing something like this, that you would also know that in this period of time, one of the lowest areas for that risk to reward thing comes in with ideas which, and this isn't going to work because the scaling of this, right, let's just pull it down a bit. Ideas that come in here along this, if you were trading along those lines of that, how am I going to do well? How am I going to trade well? And you were looking for, to start off, you were looking for something like a 1.5 to 1 risk reward, which is really actually really good. If you do that consistently, then you're absolutely flying. Well done to you. You're going to be trading really well. At all of these different points, though, along the way, had you been looking for any longs, you'd have been wiped out in the true range of this thing, and it would have gone against you, and it would have probably have felt like that attrition on your account you get all the time. Now, in this area here, it still looks like a piece of shit. Because it's trended all the way to get down here. And there's no denying that. It's self-evident. So if we are able to honestly appraise the self-evident things that are on the chart there, and bear in mind, just where your risk reward would have been, had you been looking for along at any of the points along the way here, that this one here in of itself represents a 1.5 risk reward trade purely based off of the expression of the average true range was definitely going to happen. And that to get down beyond this point here, you're looking at saying, I'm not even going to risk an average true range move here. I'm going to risk, what would it be? Half of a true range here, or 1.5 true ranges, right? Or whatever. Yeah. And no, one. I'm going to risk one true range for 1.5 true range of things, kind of like what that looks like. And you're basing it off the back of, if we go beyond that, then there's a good chance we'd go down here and look at the size, if I could just take a size of this movement potential here and compare it to any of these candles all the way along the way there. I'll just remove some more of my drawings so you can see. You're going to take this candle here and compare it all the way along here. There is only one candle of any near equivalency in this entire move since it started dropping down the way. So if you're making a comparison point between the potential here and has it been shown inside the range? Yes, it has. We also know that this move here is the average range for this period will give you this, and we know that there's hardly what the conditions would change, and we know all the different stuff. All we need to know. Actually, I did forget one thing that I was trying to say there during that mid-sentence with regards to this thing. It was the complexities of having to move my screen. See, actually, honestly, tell you what happened there inside my own head was I was trying to move this, and I was aware that when I went to zoom in, I would no longer have control over that thing to move it. So I went to go grab it, I went to grab it, making comparisons and that, which threw me completely as I was doing it. Anyway, I really loaded that section fairly heavy with education as well. And that brings us to quarter past. So do you see how I don't feel bad about skipping the ticker bingo when the G&E one came in, because we were able to do that? And also how I do massively respect every single person in the audience as well. That was, of course, Amber that said the whack is mental earlier on, so that's why we were talking about it. See Amber here saying Guitar Side, love that camp cover. Yes, did, and I was referencing that. That's why I was talking about it yesterday when I was singing songs. Oh, songs! Talking of songs. By the way, this still looks like shit. I don't know if I was clear about that. This looks like shit. I'm just trying to tell you that if you were to take any long throughout this entire period, that, obviously doing it down here is so much effing easier than doing it elsewhere in terms of the likelihood of getting a move based off of, the most simplest of technical analysis, where you can identify a gap on a chart, and then you combine that with risk to reward, and you think about it from the point of view of your average true range, and that's just and wow, that's insightful coming from an experienced, dedicated, committed professional trader who still to this day makes more of their money from trading privately myself than I do from YouTube stuff at all, and who has the ambition of making more from YouTube than from trading privately. And that's just all it is after having lived a risk-on life for so long and having health conditions that can make me go to the hospital. That's who I am. I'm Rocky Crop, and I love you all very much. We're running out of time on today's show, though. There's only 13 minutes left. Nice, got some smiles coming in from Amber over here. When Tadpole Games number 4, no need to ask, that'll be, of course, next Tuesday. Wait, tonight? Oh, you're asking because you want to know the time. No, good stuff. I don't know, man. Ask him. I play your music every day, Guitar Outside. Yeah, I've noticed that. I'm jealous. I saw you playing him yesterday morning. That was good crack. When Tadpole Games number 4, we chatted, we talked about the Tadpole Games. Trade Fun Gartley on the daily Ater chart looks like it's saying at D7 bucks. How did that go, Ater, recently? I saw your man, what was he called again? What's that guy called? Can you hear me, Major Tom? Major Tom was asking about Ater. He said something positive about it at the time when we were doing the analysis. I mean, I can't remember myself personally what it was that he said. It's not positive. It's not been positive for a while. This has been a big correction that's been due to happen. We've got this fill of this flash, which is quite nice, the way that actually happened. People have asked me, do I think about gaps over of these flashes to constitute a fill? I would say no, I don't. I think price action has to operate here, and also, that's your answer. But here you can see that actually did happen with the way that the gap came in, and then we moved down the way. Nice. This girthy candle down after having got this flash at the gap, which was created, is giving you that kind of that knowledge that we were going to get a little follow through there as well. So this kind of off the back of this kind of probably going to be some follow through there as well. Whether or not we actually see a turn on this thing soon, I kind of expect we could, and that it would be silly to not anticipate retests or anything of that gap. But this thing's obviously been looking shit. It's kind of funny. It's a strange feeling that you get when somebody else who's a YouTuber comes into your chat and asks you to take a look at stock. And they themselves are positive on it and have positive analysis that they've just published, and they're looking for your chat about it. Massively influential over your chat you have at the time. It's hard to look past this being in a downward trend. Now, this is, you're looking to see things like, have we got bullish divergence? Which we don't. Current price of this thing is 673, but there was some chat in there. There was a chat about it. Did I bring it up on screen? Hopefully it did. Nope, not there. Darn. What did you say about it? Something like how there was a flash or something. Right. Hey Brady, says Katie. Hey, Ghost of Pearl Brady. Hey. What's happening in here? What does that one say? That one says carnage, does it? Got this thing coming up. Trace Major Tom asked about Iter. That's right. That's what happened. When I close the position, I get the ticker off my watch list for a couple of weeks. Don't look back. There's another trade waiting for you. Get it. That's a nice tip from Sal. Okay. Now, I have a watch list here in TradeView which I don't manage that way. I use it because I want to be able to, because I can compartmentalize in a different way. But what we're looking at here is how do you think about things after you've completed a trade, and that is a really, really healthy way of doing things, and big vote of confidence for me on that front. Well done, good idea. What's the kind of thinking behind that? Well, you're going to miss out on any sense of I didn't do as much as I could have. You know, a lot of people think, oh, Rome will regret of missing out, or not. You know, they were in the trade and then they closed the trade and then it kept going. Oh my God, and regret. So you don't experience that. You did your trade for the reasons that you did your trade, and then you remove that from your watch list because it's no longer got that reason to trade it anymore, so you're not watching it, and that makes a hell of a lot of sense, doesn't it? There's good questions to be asked about that. How do you think about things? What do you do after you've had a winning hand at poker, for example? What do you do? Have you played poker? And what do you do? A lot of people think about this and think, well, if I have a winning hand, I'll probably be on tilt positively. So I'll check what cards I've got, but I'll probably fold, even if it's like, you know, an okay hand. Just straight away, just know that it's kind of rule of thumbs. Likewise, if you do badly, just had a big loss, just take a second, you can sit at a table, you know. So easy, and that's the way to do things as well with trading, and that's very cool. It's cool that you brought that up. Nice chat there. What's this here? Their earnings are 15th November. Wonder what that means. Tradespawn, can you remember fully? Think it was bullish on Aether and saw it as undervalued according to fundamentals. Aha! Yes. Well, fundamentals are two things. One, the fundamentals of technical analysis, which everybody should know about. Highly encourage those who are thinking about learning about it to go and delve deeper. And then there's the fundamentals of stock prices, stock valuations, and in terms of those, they're mostly just BS. One fundamental I would look to would be the emotional side of it, you know, and what would be the outcomes from it, you know, Halliburton, DeWac. These are stocks which will massively split opinion and cause emotions. Political stocks, stocks formed by former politicians, or those which are looked at as provisions for governmental stuff, biotech stuff as well. You have to look at its own sort of way and all that sort of stuff fundamentally, right? And then other stuff, like in terms of fundamentals, has never influenced the price of a stock ever in the history of stocks. So I don't know where that comes from. Never have known where it comes from. And neither has anybody you've ever heard of known where that comes from. You've got the likes of Warren Buffett, who says he knows where that comes from, but then he bought Kraft and lost $4 billion on it. I mean, when was the last time that your stock loss on a trade had a $4 billion plus move? How's Kraft doing these days? Kraft Heinz Company! We'll go up to the monthly chart to look at this one. See how it's doing lately. All right. So, you know, this is what how much did Buffet pay for Kraft? How much did Buffet pay for Kraft? $10 billion. No, wait. Berkshire funded special cash dividend of $16.50 per share. $16.50 per share. So we're above that. We're above that now. That's pretty good. So they did well on that front. So I shouldn't be too negative about them. At the time merger, Buffett's conglomerate paid $5 billion. 3J paid $5 billion for a total stake dividend of $10 billion. Gives us a total cash outlay of $17.12 billion for Berkshire. So Buffett is the type of guy who'll give you stock analysis, investment advice, who also actively puts in billions of dollars into a company to buy it, merge it with another massively successful brand that wasn't crap. And as yet, we pushed up above the 236 just a little bit, pulled back down below the 236 at $38. You know, when it's at 36, it's pretty crap. It starts to look a hell of a lot better above $38. There is a trade to be had here on this one, and we are trending slightly towards the top side. And wow, what a fantastic recovery! That's the linear chart, logarithmically, obviously doing a hell of a lot better. I should have explained this. I've been on logarithmic chart all day so far today. Didn't say that. Little. Everybody's learning. And all that good stuff. So yeah, and so we went to the 50% one. So Dow back in the day, he'd have told Buffett, Dow would have said, sell it, Buffett, sell it there, and buy it back here, maybe, or so, you know. Anyway, these things, like, I don't even know why I'm trying to slag off Buffett. I'm not trying to slag off Buffett. I'm not. It's just Buffett's advice is simply this: is take money, put it into stocks, and then get old. Preferably start with massive amounts of family wealth. That's all it is. Okay, I'm sorry, right? And I don't know a single person who's done well off the back of fundamentals. Most of the people that I know that worked in banks during the 2008 financial crisis, and I was quite judgmental about the outcomes of that. Twenty-seven minutes past, 28 minutes past now. We're coming to the very end of the show. We've got 97 current viewers. Thank you so much for being such a wonderful, consistent audience. 100 confirmed viewers. Sorry, those last three that just joined. You just spoiled the whole consistency aspect of things. I take it back. Oh, no, that's good. They just left again. 97. Right, fantastic. So, weird. These stats are crazy. Anyway, thanks to all of you for tuning in, and I really do appreciate it. I appreciate it every single time. What did we do today? We did squats to get our blood pumping. We had a target on a stock. How did that target go? Just looking over here at it. Whoops, on the wrong. Sorry. Just looking over here at it. GME. Oh yeah, well there's that one. That's GME, but wrong time frame, somewhat. Let me just hide all this crap. Yeah, well, we went up and we hit our target, 15-minute time frame target. Here, up towards 200 simple, pulled back down. Am I still targeting this move up to $183.01 as the next move on GME, as based off of the back of this signal on the 5-minute time frame? Yes, I am. What's happened as we leave off the day for all the people, the panicking people out there? I'm panicking. You must help me, Rocky. You were looking at the charts, and I was calm, and everything seemed fine. And then you went away from the charts, and it still seemed fine for a while, but you were talking about yourself, and I was only half into it. And then the prices started dropping, and I got very anxious, and you were still talking about yourself, and now I hate you because of that. So would you mind explaining what happened? Okay. We've only got 30 seconds, though, so I'm going to have to ask you to take it easy somewhat. We've got this coming up for us, this little cross here, so it's nice that we've got this at near the price action when it's being tested. You'll also note that we're in the 618 golden pocket. This pullback to this area is just offering up all of the people who trade this thing a lot of opportunity. Like I say, all of us who don't trade it, you know, great and all the rest of it, but just don't be too fooled out there by the world, because as far as I'm aware, apart from people who are in the audience, of course, who I trust and I talk to, other than myself and the people who I've spoken to about this directly, ain't nobody actually fully, you know, evidently massively diamond handing this thing. You know, is actually being traded quite a lot by a lot of people. That's the reality of it, as we can see here with all these trades that have happened and all this time that's gone by where prices have moved during it and been bought and sold. So in the majority of markets at any given time, it's institutions that buy and sell, and so of course a lot of this is trading amongst institutions. Also as well, high frequency trading bots do a lot of the activity as well, so of course it's not blah 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 blah. But also, you know, people be fibbing about it. Now, me personally, I diamond hand it. What did I do? Well, I took an amount of money that I could afford to lose, and I put it into it, and I don't touch it. And I add to it occasionally, but unfortunately I started off poor. So there's all that. Right. Anyway, we're done here. It was a simple decision for me, out of respect for what we're doing here. Simple. So yeah, interesting to see the that yeah I think we've probably covered off this lack of done gap thing. Something that I was wanted to mention. You know, this here we obviously do come down and fill in the gaps. You know, 90% of these across all assets over all time on all time frames, and 90% is a lie. 100% of these is closer to the reality, but it's way up there. Get hit. It's the most amazing indicator that's ever been invented, in my opinion. And standing on the shoulders of giants, exactly what it is. We're 32 minutes past the hour, so it's time for me to tune out. I think, hopefully, by the way, that donation link was the right one in my description today. I did try and check that. I'll just check before I tune out, by the way. Just not, this isn't to make people do it. Fiat Stream Elements Rocky Outcrop. Yeah, that's me. And I'll just double check as well whilst I'm actually on stream, because I want to, this is, sorry if you just allow me to indulge here real quick, just so I can see if this link shows my video and all that right now and whatever else. Does it not show my video? I thought this would. So that's annoying. Is this definitely me? So I'll just quadruple ultra check at some point by logging into Stream Elements over here, if that is the correct, I mean, obviously I think it is, right? But I'm going to go and get to this meeting. I'll try and get there for 4. It's 3:30 now. That means I'll try and get there for 11. It's 10:30 now if you're in the United States, and work out your own sort of unique time thing. So yes, right, right, okay. Amber, very kindly. Oh, could you peek at AEI before you end stream? You might have asked me to do this, and I might have run out of time yesterday. It might have been a thing, and I'll just quickly peek at it. I will just quickly peek at it. I'll break my own little rule for you, Amber. Naughty. I'm so naughty. Just don't tell mum and dad, all right? So let's just see here. We got past 197. This thing's had its interaction in terms of that move just there. I just wanted to check that as we go past it. And previously as well. See, these things, you know, it didn't get filled immediately. It didn't actually end, but it's another one of these. AEI. That's that volume is really rank on my charts, isn't it? I want to look before we go away from here. As you can see, the volume is massively stretched out. I've got a little hack for TradingView to get this to be possible, to stretch out your volume, which you shouldn't be allowed to do, but I've done that. And let's just have a look and see. I'm never going to get it to fit on the screen. It's had some real extreme movements in volume. Anyway, not had any of that recently. Let's just amortize that a bit. 4-hour time frame. Oh, it looks like I have done TA on this in the past. What's happened here? Let's just read this. Shorter term, it's more difficult to identify where to measure your fib from. If you're just wondering, blah, blah, blah. If I wanted to study this in detail, I would look at that high on 760 on the 31st of June. But that area has a big gap at it too. Therefore, we consider measuring from William Fractal on the 25th of June. And I did all of that. There's also a target up there at that gap at 442 for us. Nice. This is a logarithmic chart. I'll just make sure this one here is also set to log, and it is. Brilliant. That's where the 200 simple is as well. How high up is that from where we are now? 290. So it's a solid move up. We're at $2 now. It take us to 330. So it could be a nice chunky percentage move. Okay. This is a higher low in here. Okay. I don't know when I did this analysis before, but that's probably true. Where was this here? 25th of June, did I say? Just there. Full disclosure and disclaimer and everything else or whatever, this chart's a piece of shit. So you know, like, it's been a big downy, dumpy, shitey thing up till now. So I wouldn't have, like, in terms of fundamentals, I'd be interested to know, like, fundamentally why this company looks like shit on the chart. I mean, why is it shit? And fundamentals can do a good job as to explaining, you know, like, why this thing here people believed some shit about it or whatever, and what this is, and why people will try and explain it to do with like reasons about why they're a shit company or something like that. You can see it though, plain as day here on the chart. This is a piece of shit, and not only is it a piece of shit, it's a piece of shit which has gone down in 3 significant islands towards the downside. You know, so it's like, oh, let's screw these, let's screw yous again, and let's screw yous again, and so you have to be very much aware of that. So I would encourage people to therefore be and continue to be very much aware of that on these time frames where they're looking for that fill up above. Where was that flash that I was trying to point out? I would be very much aware of that. Look, right, okay, look, where is it? 4 hour time frame, was it? Aye, brilliant. 4 hour time frame. Broader look at this thing. 4 hour time frame is like a good daily time frame if you're in terms of cryptocurrency equivalency. You know, and as in crypto moves faster. So in a 24 hour, so like if crypto moves faster, that's what that means. But a 4 hour candle here is like a 24 hour candle on crypto. Anyway, yeah, I'd be targeting that area. There's bullish divergence on this thing. That's good to see. Average true range and all the rest of it shows us, obviously, we've not got a big uptick on anything. Volume shows us we've not got a big uptick on anything. We've not had massive, apart from when this thing started, massive rises towards the top in terms of these extremely exuberant 1 or 2 day type movements that take you most of the move. Instead, we've had nice trending moves. If we see more of the same, that would be nice and easy for us to get up towards this area. I would anticipate the potential for what we've seen on AHT, and then the movement up the way. We'll visit the AHT chart real quick before going away on this front. By the way, I'll also probably turn up 10 minutes late to that base camp thing, right? Or whatever in the Discord, but we'll see. Everybody relax. No big deal about it. Right, so anyway, in this area, I mean, we could be looking up towards these other targets. I would ultimately kind of want to aim up towards $11 for that big move, and I'm very much aware of how this is below 2. It's 1 something at the minute. It's not going to go up to 11 something at the minute. It's like saying 10x. So it's a big deal. Not 10x. It's like saying it's not like saying 10x because that would be 19, but you get the point. 7x move up towards top side. Nothing major long term showing us that we've got any turnarounds though, is that or any of that yet. Now the 1 hour time frame, we did get across here. It did have a nice movement up. It took us to the 236. We backed off since. We did have a negative cross here. We've been underneath this ever since. Taking out these moving averages, I will be looking for this to cross and then hopefully do that trending aspect here with the confirmation of, if you're looking at confirmation aspect of this, of that cross along the way for us to go along and ride along with. Dragging it down to another smaller time frame, half an hour showing us the same layout. 15 minutes is the same layout. It's the same thing, just with more detail, as I'm seeing on those crosses there. 5 minute time frame, back to when we had to fill in these bits, which we actually did do, and that happened before we moved up the way. So as you can see, in terms of the concepts of this and how we talk about this, we've had enough movement and enough expression and organic movement recently on this one for us to be able to do a move that doesn't necessarily crush us straight back down again straight away. I would be concerned if we did see any of that. We do have this one which was filled in right away, so we don't have that much of that stone in the boot thing as on the go. Besides, we're actually here having resolved that already. Yeah, I'm bullish on this in the short term, with a massive awareness of how there's this gap down below. Okay, there's this big gap down below. Is there a 1 minute or flash or anything down there to pull us down? There's not. So yeah, case of managing risk. Easy on this one. Take out 190. We could easily see the prices go to 185. If both of those are within your risk tolerance anyway, as in you're looking beyond that before you'd manage your risk anyway, or if you were scaling into your position here, I'm not a financial advisor on this financial advice, then you'd obviously be able to combine whatever you wanted to do with however you're trading this thing to be able to say how you feel about being bullish on it. At what point then does it turn out that I'm not bullish on it in the short term then to kind of come in with that one? And taking out the 185s, I think then there's got another move down to 166. Both of these being 10% moves each time, so I'm not pissing about, even though like, oh no, 198 down to 185, that's not a big deal. Oh, 185 down to 160, that's not a big deal. It's 10%, it's a big deal. Twice to them, so and that would be 20% overall. And then a quick, tiny, brief glance at AHT, just so I can point out in terms of go at the 4-hour time frame, show you how we had a movement down, how we came up, how we went to an area and then consolidated afterwards. We even came back down and retested our lows, and we are looking for this thing to turn around, yada, 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 because we want to be bullish on this thing because of, like, okay, let's call it fundamental reasons. And all the technical reasons we've got to go along with that as well, which are our primary driver. And we've got nice targets up above for us too. Great, good stuff. But in the meantime, I'd be remiss to not point out how, you know, you can struggle at areas, and that might be, in a sense, what we've seen happening over on that other one. And if you wanted to kind of point that out as a sort of an example of that, well, it doesn't look so keen on the 236 on that front on the logarithmic chart. I would drag it out and show you on the linear chart instead, and that's just a nice little final couple of seconds of the show. Look here to show you that the 236 lines up with where we've had that interaction after those points up above, and where I drew that Fibonacci in from, and that's nice, and that's kind of a nice little ties a nice little ribbon on me having done the analysis on the linear charts. Wondered if anybody noticed throughout. Popped it back on, got to a place where I could actually show you a nice little dynamic that expresses the difference between the two of them as I'm making an overall point about a chart movement. Chef kiss, chef kiss, and big slobbery French kisses to everybody in the office, and the audience. Who does that include? It includes Trade Spying, Amber, Geo Maxwell, Homer's Ghost, Frank, the Ghost of Dead Money, Dober Mamba, Shadow of a Lepton, a DMC17, the Ghost of Dan Ernst. You've got DP Blue 8111. That's cool. Don't really recognize your name. That's cool. Let's just see. Are you new here? That's cool. Just got on. Has he covered the whack yet? Not quite in terms of my TA, but yeah, wait, no, I did. Very thoroughly, in fact. People probably told you that. Very thoroughly. Very thoroughly. Eric Sorensen, oh there, Banana Freeze, yous are fantastic as well. Dirty Jers, good to see ya. E. Donnelly, Christy Callahan, great people, fantastic, always a pleasure, never a chore. I really, really, really do love yous. I love and adore yous. The Ghost of Dead Money, Ms. A, fantastic to see you. I wonder how you've been getting on. How's your stock doing? Oh, woof, Ms. A. Check it out. Cheapers creepers. Ms. A, you must be happy. You must be happy. You must be a happy chapetti. Or else, if you're not actually, you know, because you took profit and you did what Sal did and you're not paying attention to the chart, that's also totally fine. Right? All good stuff, though. Oh, yeah. Oh, yeah. All your friends missing out. All your friends could have been here. Share this clip with them because, you know, you were doing that recently. Tell them about friends. Hi, friends of Ms. A. This is something that we talked about. Ms. A and I. She's taking control of her own future. She's empowering herself. She's getting life skills. She's going to be able to do this no matter what happens in her life, no matter what circumstances affect her. She's always going to have a life skill where she's able to do this forever. And what have you got? Nothing. There you go. Excellent. Hope that makes them feel adequately bad enough. Right. And if it doesn't, you know, that's okay because I respect you. These are human beings, not actually wanting you to cry. Just to say thanks, Katie. Thanks so much. You learned so much today. I learn so much from everybody every day. Thanks so much. Amber, thank you so much. You cheeky sod. Ghost of Dead Money, thank you so much for that as well. Just wondering if this whole island was making a Gartley on the Atter Daily. Didn't realize anyone had asked already. Oh, I didn't even realize myself, mate. Ignored that one and the show's over now. Shit, sorry. Shadow of a Lepton, $10. Thanks so much, Rocky Outcrop. We need a ticker bingo info. Yes, and a running banner. Great. AHT earnings today. Oh, thanks for the update, Bad Mama Jamma. As you'll notice, I should have noticed that myself, and on the AHT chart at the minute. And thanks very much for the infos. I'll be sure to take a look at that stuff later. Katie Babes, thanks so much for that donation earlier on. Vic Vince, VLDR, third try on breaking above 670 ish. Will we make it this time? At this point, the recent drop might have been the retest of the wedge. VLDR. Woof, big move. 721. Happy days, Vic Vince. So happy for you. That's something you've been trading. We've been looking for that. Right up at that 618. Yes, there's profit taking right now. Yes, there's profit taking happening in here at that 618. So hard for you to see amongst all the mess. I understand. This is the current price. Where is it? Right here, right now, and amongst all the graffiti. Whoa, there it is. Whoa, we should sign this chart, shouldn't we? We totally should sign this chart. We would sign it. Banksy. Yeah, graffiti. Anyway, right in there, it's happening, Vic. It's happening, but you've done well. You've called the direction. Now you're talking about whether or not some people are, you know, the types getting in there, they're going to wait. Later on, they'll say that they were right just a bit early. Depends on how you're trading this one yourself, mate. Good luck with it, though. Fantastic. Check it out. Wow. Rapid development from all of you out there. Fantastic people doing fantastic stuff every single day. Bad Mama Jamma, thanks for your support as ever, buddy. Hope you're having a good day. Koki, Space Monkey, Ghost of Dan, you started the show very, very well. Thank you so much. Shout outs to recent members as well, have become members. Tony Picas, Men in Boom, Eddie Q, Orangutangle, Space Monkey, OG, Max Greenwell, Azaziel, Zalex, Sean, Jewel Maxwell, Texas, Thanker, he's not a wanker. Oh, great. Denise Black, Bart Geets, and all that. Use recently, and Bart Geertz. Thanks so much for becoming a patron. Massive shout out to you and all the recent patrons. If you're a patron and you would like a specific patron shout out, because I maybe said in my description of the thing that you'd get one, let me know. Send me a message on Patreon. Say, hey, I want a shout out. Could be for like Ms. A, for her friends that are missing out and taking control of their own destiny. It could be for others like Corey Bing Bong. And a Corey Bing Bong, great guy who is also taking control of his own destiny. Shout out to Corey Bing Bong's twin. Years will go by, as you already know, buddy, and as how we all know here as we experience our traverse along this mortal coil, and it'll happen all too quickly. And at some point in the future, you'll look back and you'll think, whoa, there is somebody who's done what I could have done with a small investment of time. Take a leaf out of your brother's book. He will help you. He's a good guy. And a shout out to your younger sister as well, who's just, early teenagers, and that you've got such a massively bright future ahead of you, and you've got fantastic family around you. Really wonderful stuff. I hope you go on and be inspired to achieve your dreams, because you can do it. And to all of yous, you can do it. We're in this together. See you next time, Outcropticians. Enjoy slaying Doom later on. Good luck in Tadpole Games. I hope we do it. Let's bring it to them. See ya. Whoop. If you've not hit like yet, then I don't know what to tell you. You're insane. You're insane. I do see that there are 92 concurrent viewers, so there's still 92 of you there. If you haven't hit like on the way out, share it with your friends. Make a couple of clips out of the show if you can. I did a few yesterday. You can see what they're like. I mean, the ones that I did myself, and yeah, get in touch. See you soon.
Oh, that was Rocky. There we go. Mhm. Gotta wait till it loads up. Yeah, when they load up, I can make one. Yeah. Running water? Yeah. Yeah, down there to the right. See, there's a bathroom. Big old
need to strengthen measures being discussed today will not change China's behavior. Instead, we should be focusing on how to better use a more targeted tool, such as sanctions or export controls. Mr. Lorber, America's ability to counter China's global dominance is only effective if we focus on our strengths and leverage America's economic might to counter malign Chinese activities. As has been discussed today, using our securities disclosures to advance foreign policy goals can be counterproductive. Specifically, I think adding excessive reporting and compliance burdens not based on information that is material to investors' investment risk calculus typically undercuts companies' ability to expand, innovate, and generate jobs. Will you describe, sir, how the use of U.S. investment disclosures rules to accomplish certain policy goals compromises the strength and credibility of America's capital markets?
Thank you for the question, Representative Wagner. It's a good one. I think to a certain extent, if there are additional non-material reporting requirements put into place for companies, it will, as I mentioned earlier in the conversation, potentially reduce companies' willingness to list, companies that we want to list on U.S. financial markets or to access U.S. financial markets to seek that access. So I do think there can be a direct impact on the competitiveness of those markets if there are non-material reporting requirements and obligations that are put into place.
Will you comment, sir, also on why the strength of the U.S. economy and our capital markets is key to our effectiveness abroad?
Absolutely. So as we were talking about earlier, and I believe as Ms. Ross mentioned in her testimony, U.S. capital markets are something of a crown jewel of the U.S. economy, right? They allow for low-cost capital to be accessed. They are attractive for companies that are abroad. They increase innovation here in the United States. They bolster our economy here. And so I think that to a certain extent, especially when viewed vis-a-vis the sort of control that the Chinese government is now exercising over its companies and some of the crackdowns that we've seen, those markets are increasingly attractive, and I think we should do everything we can to bolster them.
Mr. Lorber, the Holding Foreign Companies Accountable Act was enacted last year because the Chinese government has actively not allowed Chinese companies listed on U.S. exchanges to comply with our securities laws. Is it just naive to think that Chinese companies will comply with the Democrats' mandatory SEC disclosure discussion drafts proposed today?
I do think that additional disclosure requirements may not be impactful in compelling Chinese companies to comply. I mean, that's why with the Holding Foreign Companies Accountability Act, the 3-year cutoff enforcement mechanism, I think, is an appropriate mechanism. And for those companies that the U.S. believes pose serious national security threats, so maybe not just misleading on their financials, but actually are involved in, for example, the Chinese civil military program, their targeted security sanctions, I think, would make sense for policymakers to.
In my limited time, how do other tools like sanctions and export controls eliminate the question of whether or not our rules will be, in fact, followed by the Chinese Communist Party?
It's a great question. I mean, I think sanctions are a natural tool that have been employed by both of the last two administrations, the Trump administration and the Biden administration, to target companies that the U.S. government believes pose a national security threat. And in addition to that, the one other thing I would say is guidance. Treasury and other interagency partners have been really, really good in the last few years about putting out informative guidance to private sector actors to warn them of sanctions and illicit activity risks. And those companies that have read that guidance take into account that when making risk-based decisions.
Thank you, Mr. Lorber. My time's expired. I yield back.
We now recognize the gentleman from Georgia, Mr. Scott, who is also chair of the House Agriculture Committee, for 5 minutes.
Thank you very much, Chairman. This is an extraordinarily important hearing. China right now, its role in the global economy is just massive.
China is the largest exporter of goods in the world, with 9.6% of the entire global share. And while the country's GDP grew at its lowest pace last quarter, expanding just 4.9% from the previous year, China's $15 trillion economy remains the second largest in the world. Second to us in the United States, ours is number one. In your testimony, Ms. Sutter, you cite several factors regarding China's attempt to reduce debt and curtail market risks among several large firms. Here is the question for you that I think the nation and the world is waiting on. Can you explain what the impact would be for not just us, but all the global markets if a Chinese economic collapse were to occur?
Thank you, Congressman, for the question. I think there's a lot of attention right now on the situation of China's second largest property developer, Evergrande. Their total debt is about 2% of China's national debt. I think it provides some insight into some overcapacity and China's continued dependence on fixed asset investment for growth, that this is a systemic weakness in the economy. A lot of people argue that right now the U.S. potential risk exposure is manageable, but we're looking at a situation where a lot of financial firms now having new licenses to move into China. It's been discussed putting more Chinese companies into fund indices. What comes ahead? So I think Evergrande is a case study to look at the potential systemic risks in the market, how U.S. exposure could grow over time, and what would be U.S. recourse in these types of situations.
Let me ask you this. How exactly is the dramatic slowdown in Chinese construction projects and manufacturing, those two things, how are they related to the growing warning signs that we are getting of a possible shock to the global financial markets?
I would say in response, I think the main thing to keep in mind is the trouble that Evergrande and other property developers have in China arguably was started by the Chinese government. These are highly leveraged companies. Evergrande's assets, 60% are unbuilt, unsold properties. And so these companies rely on money to continue to flow so that they continue to pay. So when the government stops the ability for new fundraising, it creates crisis in the system. So I think what you see the Chinese government doing now is trying to avoid market contagion in property, the market more broadly, but they're also trying to avoid moral hazard. They don't want to signal to companies like Evergrande that they can continue business as usual. The local government in China is very dependent on these property developers for income, for local government mandates. So there's a symbiotic relationship. In the case of Evergrande, the Shenzhen government is a direct shareholder in Evergrande. So these things, I think it's the interrelationship. It's a challenge for China to get out of this situation. And I would say the situation for the United States is less our current exposure. It's more about, we seem to be at a juncture where there's a lot of discussion about increasing financial exposure in areas like this in the economy. So what would that look like going forward? Most people seem to think the current exposure, if the Chinese are able to handle the situation, is fairly contained at this point, although that depends on how the Chinese government handles it going forward. It's an issues to watch type of scenario right now.
Thank you very much, very good information. Thank you.
Thank you. We now recognize the gentleman from Arkansas, Mr. Hill.
I thank the chairman. Appreciate your work in preparation of this hearing. It's certainly a topic of interest, strong interest to members of both parties, and appreciate our witnesses' preparation and being here personally. It's good to see witnesses in person, Mr. Chairman, and not on a Zoom screen. So in the late 80s, I spent a lot of time traveling in Asia, including in China, and I can remember distinctly John Phelan's famous trip to Beijing in 1986, trumpeting the New York Stock Exchange as a potential place for Chinese companies to list. Americans had seen the success of the Asian tigers by the 80s, and I think U.S. policymakers really believed that if we demonstrated and modeled good behavior and opened up our markets, capital markets, to China, that we would get a good response. And in fact, China's capital markets did grow. Access to capital was there. And there's no doubt that free markets and capitalism and the open trading system allowed China to create hundreds of millions of people and move them into the middle class. Certainly China has benefited from this past 3 decades. But that 30 years of progress from the open door has now seen that door slam shut since President Xi has turned his country into a more authoritarian state and turning his back on the norms in capital markets. Consumers are no longer benefiting, but they're now pawns in a surveillance state. The business sector is no longer benefiting as much because markets are volatile, rules are inconsistent, and the state demands full control of entrepreneurship. Investors, I don't know if they're benefiting or not. I think the purpose of this hearing is to demonstrate that maybe they're not, because they're not getting the kind of information that a good market like the American markets provides. The third world and emerging markets are not benefiting due to the predatory neo-colonial Belt and Road policies of China. And finally, their attitude about the capital markets would make the founders of Enron blush. So I want to say thank you to our ranking member and chair for calling this hearing. I want to start with Ms. Sutter. Excellent testimony. You provided a lot of good information to the committee. And on the VIE structure, and also even using an ADR structure, which we've done for years and years, successfully. In many markets, we've allowed liquidity for foreign companies. Tell me what you think we ought to do that's fair-minded, that's compliant with WTO obligations on improving disclosure for the use of a VIE or even the ADR structure.
Congressman, thank you for the question. There has been a lot of interest around the challenges that the United States faces with China, not just in this area, but across the board, and an interest in looking at greater transparency. A couple of ideas that I hear discussed that may be of interest for consideration for you and the committee. The issue of requiring a 20F or 10K equivalent for all firms, not just those who list, but those also who have secondary listings. The issue of more detail on the corporate structure, all the beneficial owners, all the different contracts and ties across the owners is another area that some have discussed. The issue of quarterly as opposed to only annual reports on a company's financial situation.
Let me interrupt you there. Do you think if that were the status, that would make America a less effective market, say, for American depository receipts? Or would you think, not just China, but as a general matter, would that be something that would be met with appropriately since companies want access to U.S. retail investors?
I would say that the issues I just raised, I believe, are the same for what a U.S. lister would have to do.
Right. Thank you for that.
Sure.
Now let me turn to Ms. Chu. You made, again, excellent presentation. You commented on SEC Commissioner Hester Pierce's speech where she was open to additional disclosure for index providers and ETFs, exchange-traded funds. Tell me what you would think would be appropriate there.
Thank you for the question. So at present, the criteria used by index providers, who again exert overwhelming power over where U.S. investors are able to invest in China, which companies have access to U.S. capital. The criteria that they use is based on market factors. They have no considerations for reputational risks like human rights or national security, sanctions regimes, trade conflict, and these are all things that pertain.
Thank you. If you would submit for me your additional thoughts on that to the record. Mr. Chairman, I yield back to you.
The gentleman from Connecticut, Mr. Himes, who's also chair of the longly named Subcommittee on National Security, International Development, and Monetary Policy, is recognized for 5 minutes.
Thank you, Mr. Chairman, and a big thank you to our witnesses for really compelling and interesting testimony. I want to use my 5 minutes to really zero in on the China issue here. Look, there's a long list of things that concern us all about China that have to do with strategy and geopolitics and military and IP theft, and it goes on and on and on. But this is the Financial Services Committee, and I'm not a priori persuaded that variable capital arrangements are inherently problematic. Lots of U.S. companies, as the chairwoman points out, use variable capital structures. We're hearing about Luckin Coffee. I had never heard of Luckin Coffee, but dodgy accounting leading to bankruptcy is hardly a uniquely Chinese problem. So I guess let me start with you, Ms. Ross, because you did enforcement. Is there an allegation? So if I'm wrong about that variable capital or particular intensity of bankrupt companies in China, I'd be interested to know. But I'm sensing that there is an allegation floating around that perhaps the Chinese are getting special treatment in the face of the sanction mechanisms that the markets already have. In other words, hundreds of companies are delisted every couple of years. Are the Chinese, a specific question is, are the Chinese somehow getting special treatment with respect to bad behavior not leading to delisting? And more generally speaking, what is the narrowly Chinese issue within capital markets, or are they more broad capital markets issues that we should be focused on?
Thank you for that question, Congressman Himes. So I think there is a uniquely Chinese issue here, which is that we have investor protections in this country that require inspections of audits of companies that are listed here. That's been, these protections are known to reap economic benefits, both for our markets, our investors, and the companies that are listed here. Almost all non-U.S. companies that are listed here are subject to and cooperating with those protections, and the jurisdictions that they're in are cooperating in those protections. The PRC is the sole jurisdiction in the world that is blocking that investor protection. So in that respect, companies from mainland China and Hong Kong that are listed here are getting a different deal than all other companies, both in the U.S. and non-U.S. jurisdictions. That's what needs to be fixed, and that's why I commend your Holding Foreign Companies Accountable Act.
And what's the right way to address that? I mean, you know, there are well-established pathways: SEC action, private rights of action, delisting. What's the right way to address that?
Right. So you've mentioned delisting. That's the pathway that is embodied in the Holding Foreign Companies Accountable Act. What you've done is put forward a very straightforward and orderly process for managing these companies if they don't come into compliance within the next 3 years. And if you enact the Accelerated Holding Foreign Companies Accountable Act, that will be 2 years. You've given ample time for companies and for the Chinese government to understand what the pathway is, and we're already seeing investors and markets and even the Chinese government taking that seriously.
And what about the exchanges who ultimately would do the delisting? Are they particularly hesitant to take this up with Chinese issuers?
Well, in this case, it's actually the SEC would issue orders prohibiting trading in these companies, and that's a very standard procedure, as you've mentioned.
Okay, and so again, trying to get at the uniquely Chinese problem here, this is not an unusual action for the SEC. Is the SEC somehow, has it been hesitant to take this action with respect to Chinese companies, or should this committee be tightening up across the board SEC enforcement against failure to be sufficiently
Right.
transparent?
Great question. So the SEC, these are traditional tools the SEC uses, which is why I think they're going to be very useful in this case. What's unique about this situation is that the PRC has resisted inspections of audits of all China-based companies that are listed here. That's a unique situation. But you've designed this act to take advantage of, long-standing, understood SEC processes to address it.
And just in my remaining moments, I was actually interested to learn that I guess the London Stock Exchange prohibits variable capital companies. Is that an idea that would have support amongst these witnesses for adoption here in the United States?
I do think there are risks associated with variable interest enterprises. I think that they are very opaque. I do not think that the average investor understands that when they're investing in a VIE, a listed company that's based on a VIE, they are not investing in the operating company that's based in China. They have no voting rights, and they have no rights to, no say over what management does, no rights to information. That's very different from other, most U.S. listed companies, and I think that presents very big risks to investors.
Thank you.
Thank you.
Thank you. My time's expired.
Gentleman from Ohio, Mr. Davidson, is now recognized.
Thank the chairman. Thank our witnesses. Appreciate your testimony, written and oral. And Ms. Ross, I just want to say thanks for your dialogue there with Mr. Himes. I think you did a great job highlighting the specific problems where China really is getting a different set of rules and the disclosure regime, and hopefully how legislation passed here could change that and apply an even-handed set of policies that are already in the standard toolkit for the SEC. So I hope we see some real results towards that. So thank you for your dialogue. I'm concerned about OFAC. I mean, frankly, we've done a lot of sanctioning since 1975 when this law was applied. And I'm also concerned about China. And frankly, the conflation of market risk, which our committee dealt with and Ms. Ross highlighted really well, with policies that are really foreign policy, like, for example, the treatment of Uyghurs. And Mr. Lorber, I, in particular, just want to know how effective has OFAC been at identifying and addressing national security risks, and is OFAC a more appropriate way to deal with China's human rights abuses than the Securities and Exchange Commission, for example?
Thank you, Representative Davidson. It's a great question. I will say OFAC has been particularly effective, both generally but also specifically related to human rights. After the passage by Congress of the Global Magnitsky Act and the implementation of that act in December 2017, the Treasury Department and OFAC have targeted a wide range of human rights abusers and oftentimes caused them to lose hundreds of millions of dollars in assets. So there has been a real impact that OFAC has achieved with the use of human rights related sanctions. I do think that to your second question of whether or not OFAC should be, for example, the body that goes after human rights abusers versus something like the SEC. I do think OFAC has expertise, and the Treasury Department more generally has expertise. They have an intelligence collection function, for example, that allows them to identify and successfully target human rights abusers.
Yeah, thank you. And frankly, it's a national security problem dealt with by America's government, with the people with the toolkit and the intelligence to do it. And the passive approach is to say, well, these publicly traded companies are going to do it. That's what was done on Conflict Minerals, for example. And at the time, I remember one of the companies I had like 30 employees in it, and I'm filling out forms on Conflict Minerals when I buy steel. And I mean, a small business in Western Ohio isn't really in a position to assess the supply chain risks of steel mills. And so everyone just signs off on the form. It's a very passive approach versus a very active approach to diplomacy. And in general, that's been kind of the challenge, hasn't it? With China, America's been a little too passive. We've hoped for all these good things from China, but in spite of the facts that we see China's abuse of the World Trade Organization, for example, we haven't forced them to honor their existing commitments, and we haven't forced them to play by a standard set of rules. And that's what I love about the idea that if you want to stay listed, you have to be subject to our accounting policies just like anybody else. And if you want normal trade relations, you have to be compliant with human rights standards around the world. And I think it's long overdue that we apply that to China. Now, inside China, of course, China's concerned about their own domestic market, and they have lots of attention focused on Evergrande, for example. But we're watching a meltdown in China that may be similar to real estate meltdown in the United States. They had a massive boom. They've definitely inflated asset prices in many of their real estate markets, and Evergrande has been at the center of that. So, Ms. Sutter, I just wanted to maybe finish with you. Your testimony does an excellent job of laying out the developments surrounding Evergrande. As you state, about 60% of their assets are unbuilt and unsold properties, and the firm counts loan interest payments as assets. This has empowered Evergrande to become shockingly leveraged, and now Evergrande owns about $305 billion in debt, 2% of China's GDP. We've already seen developments where Evergrande has failed to repay some of its obligations. However, there hasn't been contagion effects we would expect when an entity of this size goes into default. Why do you believe that is? Is China actually subsidizing it directly, or do you anticipate things by the People's Bank of China to deal with it?
Congressman, thank you for your question. I think the government is directly involved in restructuring Evergrande. They've set up a committee, and it's very similar to what they've done with other companies that have gotten into financial trouble, Anbang, H&A, Fosun. And I think what they're trying to do is discipline the company while not having contagion in the broader markets, property market, and broader markets. And so I think that they're it's a little bit of push-pull.
Thank you. And if we can follow up in written, my time has expired, and I appreciate the chairman.
The gentleman from Illinois, Mr. Foster, is also chair of our committee's task force on artificial intelligence, is now recognized.
Thank you, Mr. Chair, and to our witnesses. You know, there are three functions of our capital markets: to allocate capital, to do so efficiently, and to control risk. And the opacity of Chinese financial products puts at risk all three functions. American capital markets are the premier venue for issuers due to our deep liquidity and broad investor base, both of which are substantially the products of the high information transparency established by our regulatory regime. Essentially, here more than anywhere else, you know what you're buying into. We must uphold these standards, and there should be consequences for not complying with the transparency measures, which is why I was a proud co-sponsor of Chair Sherman's Holding Foreign Companies Accountable Act, and I look forward to further bipartisan action on this front. Now, when we take action, one key question is whether the U.S. should act unilaterally, bilaterally, or multilaterally. You know, if we unilaterally start delisting China-based companies, per the Holding Foreign Companies Accountable Act implementation, do we risk triggering a regulatory race to the bottom, where the delisted companies would just say, relist in, I don't know, London, Germany, Singapore, Hong Kong, or even dodgier locations? Or are we better off acting multilaterally? Very much like President Biden's recent successful negotiation of global minimum corporate tax rates. And so my question, I guess, to all of our witnesses, is there any significant discussion of multilateral agreements on minimum transparency standards for listed companies? And if so, what are the venues in which these are discussed, at least among the free democracies of the world? Just happen to go down the line, anyone? Ms. Sutter, do you want to take a swing? Or whoever. Yeah.
Sure. Thank you, Congressman, for the question. There is competition among exchanges, and that is a consideration about when one market takes moves, how companies shift potentially to another. I would mention that under China's leader Xi Jinping, there's been a big push for Chinese companies to come home, to list either on Hong Kong, in China, either as their only listing or as a dual listing. One issue for consideration could be to look at U.S. standards with like-minded, open, transparent markets that lean on the rule of law in the sense that we do, and to compare those standards.
So my question is, what are the venues at which those might be discussed or could be being discussed now? Are there groups that are looking into this sort of thing? Ms. Ross, did you want to?
I agree with Ms. Sutter's characterization or description of this situation, particularly in China, that the Chinese government is actually pulling the companies home. But to your question, Congressman, the SEC is a very active member in the International Organization of Securities Regulators, known as IOSCO. IOSCO includes almost all major securities regulators around the world and has many committees that develop all kinds of model rules, model legislation, share information. That's proven to be a very proactive and successful forum to raise standards across the board and address some of these risks that you're talking about like, for example, race to the bottom.
Yeah, is China a member of this? And what would be their reaction if we raise standards, that would effectively delist their companies in the U.S.? Would they insist on letting those lower standards still apply in China?
None of the members of IOSCO are obligated to follow the requirements of IOSCO. IOSCO is really a body to share and develop best practices, and the members, then
they pick and choose, right?
They pick and choose, but it's still a very good forum to
discuss. And so there would have to be a separate new group that says, okay, we are all going to agree to common standards, to avoid this sort of regulatory race to the bottom.
If you wanted to do that, yes.
Yeah, Ms. Chu.
And I'd just like to jump in to note that the EU recently enacted a regulatory framework for index providers. I think that's the first time they've done anything of the sort. And I would encourage the United States to consider enacting similar legislation, similar regulatory policy, or to seek out commonality.
Mr. Lorber, any comments? Or?
I don't have information on whether or not there's a multilateral body to prevent the sort of regulatory arbitrage that you're mentioning. I will say I do think at a high level, while obviously regulatory arbitrage of this nature would be a potential issue and a concern, there would be certain companies that I think pose national security risks that even if they were to say, we're going to go to another exchange, we would want to prevent them from accessing U.S. capital markets in any event.
Right, understood. My time is out. Yield back.
Mr. Hollingsworth is now recognized for 5 minutes.
Well, I'm excited to be here and appreciate all the testimony that's been given thus far throughout the course of this hearing. There's a lot of issues on the table, and in this constellation of issues before us, I wanted to break a few things apart and better understand both the aims which we are trying to accomplish and the means by which we might get there. It seems in my conversations with colleagues on my side of the aisle and colleagues across the aisle as well, that there are a couple different things that are being talked about. Number one, there's deep concern that China may be appropriating technology from U.S. private firms and certainly from U.S. government as well for use of its own design. Number two, there's some concern about protecting U.S. investors from Chinese companies that may list here but in fact not be engaged in the business practices that they say they are or not be audited in the manner in which we believe they should be. I think number three, there's some concerns that firms that might be gaining advantage of U.S. capital are deploying that in unethical ways, right? Uyghurs, for example. That probably isn't specific to China, but it's around the world, no matter where it may be and what its geography may be, that we would disapprove of. And I think fourth, there's this also lingering sense that's hard for me to shake that perhaps we are just out to deprive Chinese companies of U.S. capital, period, instead of U.S. technology. And I want to make sure that I understand all of those different aims so that the mechanisms by which we might accomplish that truly get us there. Mr. Lorber, I wanted to talk about one of those specifically with you, and that is the deprivation of technological transfer from U.S. firms to Chinese firms that we believe may be a threat to our national security, and the means by which we have currently in place, in law, to stop that. Could you speak a little bit about that?
Yeah, thanks. It's a great question, Representative Hollingsworth, and I like your sort of framing and the bucket system that you've approached us with. On the first bucket, which is the concern that China may be appropriating technology and what we have in place to prevent that, I think there are a couple different mechanisms that exist. One is surely private causes of action. So this may not be a U.S. government approach, but there are lawsuits that can be filed. Likewise, there are criminal causes of action too the Department of Justice can pursue.
Right.
And part of this process during the last administration was undertaken with the Department of Justice's, I believe it was the China Espionage Unit, I think was the name of it, something akin to that. The second primary body that you can think about when it comes to technology theft would be, or concerns about technology appropriation could be in the context of CFIUS, the Committee on Foreign Investment in the United States, and of course this body's revision of CFIUS with the passage of FIRMA in 2018.
Right.
And then there could also be potential targeted sanctions that could be focused on particular Chinese companies if the administration decided to do so.
Is there a gap today that exists that we should solve for in the prevention of that important technology transfer?
I think, I'd have to go back and take a little bit of a deeper look at it. I think one of the concerns is that on the private cause of action front, there are challenges. I know there have been instances where Chinese companies that have been accused of IP theft have employed certain legal measures here in the United States, like the Foreign Sovereign Immunities Act, as a way to try to prevent private litigants from accessing it. And I know there's been a major debate about that over the last few years in the legal community.
But much of that work is ex post facto, right? The technology transfer has already occurred and they are trying to recoup their losses therefrom as a private enterprise or private persons, right? Much of our work up here is the prevention of that rather than the putting together of Humpty Dumpty. I wanted to better understand, is there any area that we need to do work from a legal standpoint in the prevention of technological transfer that threatens our national security?
Well, so I take your point that it's kind of an ex post thing, but I think that even if it's solved for ex post, it could have a deterrent impact moving forward. So for example, if companies are thinking about stealing US IP and they recognize that if they do so, there's a decent chance not only will they get sued, but that they'll lose
Well, that
in court.
only counts if that suit renders a judgment and that judgment is collected upon, right? Which is a real challenge.
100%.
Look, I think what I'm trying to make sure I understand is I don't believe that we should solve these problems in the financial sector, but I believe we should solve them with very vigorous laws that prevent this and real penalties in the event those laws are broken. Call the sheriff if someone is stealing. Don't call the local bank to try to prevent them from depositing it in their bank account. With that, I'll yield back.
Mr. Vargas is now recognized for 5 minutes.
Thank you very much, Mr. Chairman. Mr. Chairman, I have to say that I think today's hearing has been excellent. I agree with most of the things that have been said on both sides of the aisle. However, I also think that whenever we talk about China, there's a great disconnect between what we say and what we do. So, for example, I agree fully with everything that Mr. Hill said today, and Mr. Hill's a good friend, and I know he has great experience in this, and I think he's absolutely right that China has become very aggressive, become an authoritarian state, and they collect a whole lot of data that they shouldn't be. However, at the same time, I'm from California. I can tell you, we have ships way out of the ocean now waiting to be unloaded with all the Chinese product that come to the United States. We can't seem to buy enough. It's incredible that we say that they cheat, they do all these things. We have the great nation competition, yet at the same time, we don't seem to say that we're not going to buy all their stuff. We do, in fact, do that no matter whether they come here and they cheat or they treat Uyghurs terribly and abuse them and have horrible human rights issues and spy on all their people. It doesn't matter. We still buy their stuff. I try not to. I try very hard, but at the same time, it even drives me crazy that my iPhone is not manufactured there necessarily, but it is put together there. We say one thing and we do another when it comes to China. And I think we have to understand that they are not only competing with us, but they're becoming a real threat. And we have to do more than what we're doing. That's why I think